Hello, ladies and gentlemen. After a long break, here are now again some remarks on my general introduction to tax law. That is a beginner's lecture with basics, and we have already spoken about the personal tax liability. That was if you are somebody subjected to a worldwide income taxation or only to a territorial limited taxation. And you probably have remembered that in German law one would call that the unlimited tax liability, the case of worldwide income taxation, and the limited tax liability where the tax claim is limited to events in the inland. Now we come to another logical aspect. If you know which rules apply, then you must define the income, that what you are going to tax. So the objective tax liability. Here that overview shows you that again, every test of a case, every legal testing of a case will begin with personal tax liability, where you decide if something is someone, is a natural or juridical person. So if that person exists in nature, is a human being, or is a creation of the law, like a stock corporation or such a thing. And now we come to step number 2, where we analyze what happens. So the objects which are taxed, the income. Now, after these introductory remarks, let's think about what can be income. Well, when it began that people wanted to tax income, there were two completely different ideas of what income is. There is one idea which says every increase in your property is income. So income is just getting wealthier, getting richer than before. So income, any increase in your property, at least in your net property. Okay. And the other idea of income is more conservative, it's a bit more old-fashioned. The idea is if you have a regularly flowing income, a regular income. This is rather more your potential father-in-law's view. Young man, you want to marry my daughter? Yeah. Do you have an income at all? So then it's meant regular income from which you can constantly live. That is a distinction which people had in the backs of their mind when the first income tax laws were designed. So you must distinguish, there is a source theory, that is, income is only something which regularly flows from a source. Source theory means you own a source of income and it generates regular income. Must not always have the same amount, but regularly it flows. For example, you are the owner of a shop, you run a trade, and that regularly generates income 1 month after another, so you have a source of a constant income. The other alternative is the increase of property theory, in Germany called Vermögenszuwachstheorie, which says everything which makes you richer is income. So not only the regular flow of income generated by a source, but also that gain which you make when you sell the source itself. So selling the property itself, that is the decisive income difference between the source theory and the increase of property theory, because in the perspective of the source theory, selling the source itself is not an income. Clear, that's not a regularly occurring item, but that happens only once. So they regarded this as not a kind of a constant basis for taxation. And the other one said, okay, getting richer is getting richer. It doesn't matter which way it happens. So any increase of income is income, any increase of property is income. Doesn't matter how, we are going to regard everything as income. It's all equivalent. That's the increase of property theory. So the basic difference is how are gains from selling the underlying property, from selling the source, are treated. Now, these two ideas were in the mind of people when in the 1880s or 1890s income tax laws were designed. At least at that time it happened in Germany. Britain began a bit earlier, approximately at 1800 or so, but only for a short time. Then they dropped this peculiar tax again and later reintroduced it. Well, let's look a bit to what happened in Germany. There, people discussed which theory are we going to follow, this rather old-fashioned source theory or this increase of property theory, which is more modern and promises more money. Now, you can imagine what happened. Politicians, what do? They want to make a compromise, so they didn't decide for one of the theories at all. They combined both theories depending on which kind of income you had. So in Germany, the approach was one made a list of different activities which usually lead to income, regarded that as taxable. And then the first three types of income were defined following the increase of property theory, so that everything which you sell is taxable, whereas within the types of income number 4 to 7, the source theory was followed. So there, only regular income counts, but not the income from selling property with which you generate that money. Now, that was only the German solution, but other countries know the same distinction between regularly flowing income and income from gains from selling the property. The UK solution, for example, was that they regard income only as the regularly flowing amounts and not the underlying capital. But well, the Germans just said in some cases we want to tax the gains from selling property. Well, and also the British later came to the idea, well, there is a big amount of money lying around untaxed, so that can't be. But the British didn't tamper with their income definition. They just said, for these gains from selling the property, we introduce an additional tax that was called capital gains tax. So when in Germany you have a taxation of current income and of income from selling the property, in England you have basically the same. You have a taxation of regularly flowing income under the term of income tax plus taxation of the gains under an extra tax named capital gains tax, apart from the formalities, so it's relatively similar in the end, which makes sense. Similar problems, similar solutions. The development is probably a bit different, but if you have similar market, similar laws, similar problems, state needs money, and in the end, very often you will end up with similar solutions. Good. Let's go back to our German income tax definition. So here we had a list of 7 types of income. And the first 3 said regularly income plus gains, and the last 4 said, okay, only the regularly flowing amounts are defined as income. Now, in order to make that difference in the concept between these different types of income clear, one marks this, at least in Germany, also by the use of different technical terms. For example, when you speak about the tax base in types of income number 1 to 3, you call it profit, in German Gewinn. And the term for the tax base in types of income numbers 4 to 7, the other ones, is different. It's called in German Überschuss der Einnahmen über die Werbungskosten, which is a rather long term. sometimes abbreviated to Überschuss, and in English that is best translated as the surplus of revenue over expense. Sometimes people use that term income not correctly, but then you could find surplus of income over expense. But we among ourselves should agree that income is the net amount, and that surplus revenue and expense are its two determining factors. Yeah, so we speak of the profit and the surplus, and you should keep these two terms apart because that reminds you of the underlying basic real difference in measuring the taxable amount. Now, also when we speak of revenues and expenses, we mark that difference in terminology. The types of income numbers 1, 2, 3 call revenues business revenues and expenses business expenses. The other types of income just speak of revenue, or better taxable revenue, and expense, or better income related expense, just to distinguish it from everything. So that's with the terminology. And the terminology also reflects the status of the property. You know, if you have property which you use to generate business income, types number 1, 2, 3, then the underlying property will be called business property, and then you know in the income types numbers 1, 2, and 3, selling the underlying property which generates the income is also a taxable transaction. You will have to pay taxes on the gains, basic rule at least, that is. And in the other types of income, selling the underlying property is not taxable at all. Again, the basic rule, that is. So we call that private property. So from the term how property is called, you can already draw conclusions how its tax status will be. So that is something you should always keep in mind. The basic rule for business property is selling it is taxable. And the basic rule, there are exceptions naturally, like always in the world. The basic rule for private property is, in German law, selling it is not taxable at all. Good. Now, when you have 7 types of income, here they are. The first on the list, here on the left side, is number 1, income from agriculture and forestry, in German, Einkünfte aus Land- und Forstwirtschaft. I just pronounce the German words so that somebody later talking to a German can recognize the German terms if somebody translates in a different way. You know, income from agriculture, forestry is a translation. There is something like freedom of translation. Everybody translates as they want to, and so somebody else might translate a bit differently, so it might make sense to also mention the original German term. Einkünfte aus Land- und Forstwirtschaft, or income from agriculture and forestry. That's the first on the list. Then the second one is income from business, in German Einkünfte aus Gewerbebetrieb, also taxable. Then a special form of business activity, certain noble professions which are historically accepted from city tax, the trade tax, are listed in a separate kind of income. That's the so-called income from self-employment or income from independent services, in German Einkünfte aus selbstständiger Arbeit. Now this headline or this label is really a bit misleading, because self-employed people, Americans and potentially also the British, will probably have the idea that's a single person working as his or her own boss. Now that's not meant. The German type of income, income from self-employment, only covers very, very specific potentially rather noble professions, not the ordinary craftsman working alone, being his or her own boss. That would be qualified as income from business. So income from self-employment would only be a lawyer, a tax advisor, a scientist, a teacher, so the so-called free professions, which usually require some high standard of education or are somewhat high-level professions. There is a closed catalog of these professions. So the chance that you end up there is relatively low. Normally, when you are your own boss, you have income from business in the German law. Good. Number 4 is income from dependent services, so from employment. That's probably the most relevant type of income for all of us. And then it goes on with number 5, income from capital. So when you invest money and get regular income in return, that's number 5. Income from lease and rent covers if you let your house or a piece of land to others and collect rent. If you let other property, not every other kind of property, to others and collect rent, or if you profit, profit is just misleading here, if you get revenue from allowing others to make use of rights which you have. For example, if you are the owner of a patent right and allow another firm to use your invention in return for license fees. And number 7 is the last one on the list. It's called other income, although it's not all other potential income. It's other income according to a strictly defined list of other income activities. Good. Now, naturally, when you see these different labels, it is not difficult to imagine that there will be cases where an activity can be labeled or subsumized under 2 of the types. For example, a bank gets interest from a customer for a credit. Now, giving somebody credit is definitively using capital to obtain income. So the interest which the bank gets, sometimes the brain is already gone dead before COVID was invented. Oh my God. So back to the roots. And back to the example. When you have income from interest, that's definitively income from capital. That label would be possible. On the other hand, you are a bank, so you run a business, and collecting interest is a part of your business. So one could also use the label number 2, income from business. Now, greedy people would say, okay, then we tax it as income from business and tax it again under the headline of income from capital. No, that's a bit too harsh. That can't be done. So that means you have to decide. You have to decide which label prevails. Now you could say, well, income is income. If you can just say, what I do is covered by one of the entries on the list, that's sufficient. The answer is no, because we have already seen that if something is classified as income type number 1 or 2 or 3, that the consequences will be different from qualifying it as, let's say, number 5. Now you can imagine if qualification as income from business is equally possible as income from capital, but number 2, income from business, enables the state for a wider definition of the tax claim. Also the gains from selling the underlying property will be taxable. Then you can easily conclude which version or which solution the state will prefer. Naturally, the income tax with the wider claims will probably prevail. Now you will have to regulate that in the law, and that has indeed been done. Here the types of income which are yellow are business income, which is business property, and they prevail over the types on the right side, number 5 to 7. Now, number 4, income from dependent services, is also something which prevails in cases of conflict with something on the right side. There can be no conflict between number 4 and numbers 1, 2, 3, because for numbers 1, 2, 3, you need to be independent. For number 4, you need to be employed. That's impossible to be fulfilled at the same time, so no problem there. But it can happen, for example, that you receive some money because you are employed, but on the other hand, it could also be seen as interest. Imagine your boss is not able to pay your salary, your wage at the due date, asks you for some tolerance and says, I'm going to pay your wage a week later, and as a compensation for the delay, you will get 100 euro on top. Then you say, okay, nice. So these 100 euro could be seen first as a kind of interest for the delayed payment. So then it would be interest from capital. On the other hand, there is a connection with your job. And now, so you could label it as income connected to your job, number 4, or number 5. And now, surprisingly, income type number 4, income from dependent services, has for the fisc a better consequence than number 5, because income from dependent services is subjected to a duty where the employer has to make prepayments for your annual income tax. So everything which is qualified as income from employment lowers the risk for the fiscal administration to lose their tax claims because the taxpayer didn't save enough money but spend it. Here, with the qualification as type number 4, immediate prepayments will be made, and that is naturally a reason why, in cases of conflict between number 4 and number 5 or so, also the German law prefers the qualification under number 4. That is sometimes that relationship is qualified or named as characterized by terms like main types of income, that are the ones which prevail in cases of conflict, here number 1 to 4 on the left side, and the other ones are the subsidiary types of income, so they back down if there is some other label available. They could also be called ancillary types of income. Good. Now we have again become a bit more intelligent, a bit more informed. Intelligent, probably not. Good. So the main significance of these labels is if you qualify something as or can qualify something under one of the main income types, then that prevails over the qualification in the ancillary types of income. The example would, for example, be the interest paid to the worker, qualified nevertheless as income from employment, or a hotel takes a guest and the guest pays for a room. That could be regarded as lease and rent income because you let a room to a stranger. On the other hand, a hotel is definitively qualified as a business, so you could qualify it as a business, and now the label business income prevails. The same problem exists in other countries too, and there must be a solution naturally in other countries too. Naturally, each country will have a different set of a different list of income taxable activities, and they will solve their qualification conflicts according to their own traditions, although I dare to guess that this German habit, that tax category which entails the more drastic tax consequences, that category prevails. I think that probably was always highly attractive to other countries too, that solution. Good. Short comment on the translation. I call it types of income. In German it is Einkunftsarten. In English-speaking countries, very often they have similar things and they call it the schedules of income. I rather prefer to choose a deviating translation, so something which the English and Americans don't know, types of income, because when you then speak of a type of income to a US citizen or a UK citizen, then these people directly see, okay, seems familiar but is not my technical term to which I'm used from the US, so it might be similar to what we know, but it's definitely possibly not exactly the same. And that, I think, is important to signalize to the people with whom you speak, also when you translate, and you should avoid, or that the thing which you talk about is perhaps similar to what they know. They should be able to recognize the parallels, but they should be warned, or they should be kept away from that wrong conclusion that same word, same contents. That would create misunderstandings, because we can probably think that there is not a total correspondence or total identity between the German types of income and the English income schedules. If we want to look up the whole thing in the German income tax law, naturally, you know, everything must be down in the law, because no tax without a law. Then you find the list of the types of income in section 2, or better, the Germans would say paragraph 2, section 1. And then my basic difference, which I explained to you, between the first three and the last types of income, profit or surplus, that basic difference is laid down in paragraph 2, section 2, ESTG, so German Income Tax Act. So if you can't memorize, if you can't remember which type of income has which tax base, just take a look in paragraph 2, section 2, ESTG. Good. And in exams, you can always make a short statement. This is income from business, covered by section 2, no, paragraph 2, section 2, section 1, number 2. Oh my God. And the tax base needed is the profit. See paragraph 2, section 2, number 1. So there you can always get some additional points. Here you see my personal translation of that little section of the German Einkommensteuergesetz, the Income Tax Act. The income is defined as, in case of agriculture and forestry, business income and income from self-employment, as the profit. And then they give you references to where the details how to measure the profit are defined. And in case of all other types of income, the surplus of revenue minus income-related expense over income-related expense. Well, you know, I'm not a native English speaker, so probably my English hurts an English reader, but on the other hand, reading in German law will always hurt an English reader, will also hurt German readers, so getting hurt by the translation is only a slight hit on top. It does not get better. Good. Here the details are in the paragraphs 8 to 9a of the ESTG. Yeah? And a peculiarity has been added some 10 years ago, perhaps 15 years ago. In case of income from capital, there is a deviating regulation that is paragraph 20, section 9 replaces the rules on deductible expense, the paragraphs 9 and 9a. As far as paragraph 32d does not state something else. Here you see already sometimes you begin with simple statements and then you give references to other parts of the law, which makes things complicated. The only thing you have to remember at the moment is the first sentence. Here you can easily look up how things are defined. Okay. Now, you have in paragraph 2, section 1 ESDG, a list of the 7 types of income. And naturally, your first task, if you want to decide if something is covered by income tax, so if income tax will become due for that activity, then you must check if it's one of the 7 income types of income. And naturally, that cannot only be decided by just naming it. You must strictly define what is income from agriculture, what is income from business, from self-employment, and so on. And so the next parts of the German ESDG contain detailed information to what has to be seen as income from agriculture, and so on. So when you have a suspicion which type of income it could be, the next step is turn the pages in your printout of the text legislation and then find the right category and check the definition. Is it really income from business or is it income from something else? So that makes sense. Now, agriculture and forestry would be the first thing, but now, ladies and gentlemen, okay, there are certain things which you can directly recognize. For example, somebody has a farm. Okay. And now, sorry, but mainly people who study business administration or taxation usually don't specialize on agriculture and forestry, so we just leave that out. That is only interesting if by chance you end up in a tax consulting firm where they all are specialized on giving tax advice to farmers. Then it's time enough to learn it at that moment. Until then, forget about everything but the clear cases. A farm is agricultural forestry. Now, big important issue is income from business. There you need to define 2 questions basically. What is a business activity? So what leads to income from business? Okay. And, well, if there is a business, who is going to pay for it? So who is then the taxpayer? That can be found both in paragraph 15 of the ESDG, and here you have first what is in the law. Second, that's paragraph 15, section 2 ESDG. An independent and sustainable, so constant for a certain while, activity with the intention to generate profit and with taking part in the market is called a business if that activity can neither be seen as agriculture and forestry nor as the exertion of a free profession or another form of self-employment. So, to sum it up, if you have no boss but are your own boss and you do something for a longer while and you want to make profit by it, so it's not sheer generosity, and you address yourself to the market and not only to your family members or closest friends, then this can be called a business. But if it's a farm, then you will see that the first criteria are also fulfilled, and then it's not a business but agriculture income. The same if you are a tax advisor. If you are independent, you do your job for a longer time, you want to make a profit and live from your tax advising activities, you offer your services to everybody in the market, so you would be a business if there were not the special rule, no, this activity is qualified as self-employment. So that explains sentence number 1. Sentence 3 clarifies something. If it's said that you need to have the aim to generate profit, that does not mean that it should be your only aim or your main aim. Huh? So even if your principal aim is something else, if you intend to make profit, you run a business under the Income Tax Act. Now, the question, how can I find out if the taxpayer wants to generate profit? And the answer is, well, easy. If you make profit, then at least you didn't oppose yourself to profit. So evidently you wanted profit. Otherwise you would have avoided profit. So when you make profit, that's argument enough to say that you wanted to make a profit. Otherwise it would not have happened. Simple, plain. Another additional condition has been set by jurisdiction after a while, because imagine somebody owns 1, 2, or 10 buildings and lets them to tenants and collects rent. This is naturally an independent activity, because if I'm the landlord and I own some houses, I'm my own boss. Letting my house to others is a sustainable, a constant activity for a longer while, yes. I want to make profit, yeah. And I address myself to the market. If there are people willing to move in and pay rent, I take them if I have some free rooms which I can let. So definitively all conditions number 1 to 4 fulfilled. Being the owner of some houses is also not self-employed, because it's not a very noble profession, and it's definitively not agriculture and forestry. So all the 6 conditions, the first 6 conditions, would be fulfilled for somebody who just lets a house to tenants. And that is where the courts came in after a while, and it's already a long while ago, and said, well, this German tax law definition can't be regarded as absolutely exact. There is between the lines a 7th condition. The business is not given if the taxpayer only merely administers or uses his own property. If you own 10 houses, what else could you do than letting them to tenants? That's a mere passive activity. You do nothing. You just use your property in the usual way. Not really the activity which characterizes a business. So this is condition number 7. Mere administration of one's own property without any activity going beyond that is not classified as a business. When it comes to who has to pay, there are different possibilities. First, you have a sole trader. Then 15.1, number 1, income from business is taxable income. So from your own business. The second is you can be a partner in a partnership, and that partnership generates income from business. Then you know, according to the definition of a partnership, all the partners are doing their activities together, and everybody owns a certain percentage in everything which is earned. So the share in the profit of a partner in a partnership is automatically also that partner's income from business. A third alternative is a so-called limited partnership on shares. That's relatively rare and seldom, so forget about that. Yeah, so to sum up the characteristics of income from business in 15.2 ESDG is 4 criteria must be fulfilled positively, and 3 criteria must not be given. That is, no agriculture, no free profession, no mere administration of profit. Here they are again. Now, after that, let's talk about business income type number 3, income from self-employment or from independent services. The most important subcategory here are the so-called free professions. They are listed in paragraph 18 ESTG, and historically these are mostly professions which historically have been seen as very noble occupations: doctor, scientist, teacher, an artist, an entertainer. Yes, at least some of them. That might qualify for the label free profession. And then that means, okay, can be categorized here. The difference to business income is apart or in addition to income tax, also subjected to a local tax in Germany, to trade tax, and the income from self-employment is not. Naturally, the free professions are mostly a closed list, but there is one entry at the end, and comparable professions. Now, if somebody claims to be a comparable profession, you must show similarities to one of the professions in the list, and the similarity must be given with respect to the contents of the activity and the level of the education which is required to exert that profession. Here we have the text. Well, something for you later. Now, self-employment. Where does it end and where does business activity begin? Well, behind the idea of these free professions, you always have the idea that this is a single person, probably working alone, doing a noble activity, and so on. Not the guy who just organizes a big kind of a factory. For example, you have some talent for organizing things, you employ 100 tax advisors and then do tax advising for half of the world. If you are just only the organizer, then you do not have free profession, a noble activity. So that would not count. The idea is you must exert that activity yourself, at least the main part of it. And so German law requires that for the classification as self-employed activity, the holder of the profession, the boss, must at least take a leading part in each activity, so in each job the firm has to do. And you can outsource a bit of the low quality work, for example, typewriting to a secretary, copying, writing letters. You can also use people who help you on a professional level, for example, somebody who made a bachelor degree in international taxation can work for a tax advisor and prepare case solutions for cases, but then it's still required that the holder of the firm, the boss, takes interest in the individual activities and leads them and can still be regarded as responsible for the outcome of each activity undertaken by the firm. So you need to be occupied with the tasks done by the firm in a way that you still can be regarded as directing every individual activity involved in a responsible position in every individual activity. So control and professional responsibility must be given, otherwise you turn into a business. For example, if you are a translator, it's also a free profession, then it's clear you can give some jobs to others who prepare a text, a draft, for example. You do the final review and polish the text, then it's still your text. The others worked for you, but you used their results and produced the final outcome. On the other hand, if in your translating firm you also translate texts from English into Russian, but you don't speak Russian, then you cannot supervise in a responsible way the translations which your employees do from English to Russian. Impossible. Then you violate the conditions for free profession, because that's no longer your own activity of which you only outsourced some preparatory steps where you did the final steps, because in that case that would be impossible. You don't know that language. Now we can think about some examples. For example, tax advisor John Smith passes away, so he dies. His office, tax advisor's firm, is inherited by his son. Son is 23 years old, and son is a professional office helper for tax advisors, but son is not a tax advisor himself. If that were allowed, that son goes on, then son doesn't have income from a free profession, because the son doesn't qualify as a tax advisor, but is somebody on a lower level. The contents of the activity might be similar, but not the level of education. So acknowledgement as self-employment would be refused. That would be business income. And by the way, under German legislation for tax advisors, the son would not even be allowed to run his father's tax advising firm. He would be forced to sell it to somebody who passed the tax advisor's exam. Income from business is the basic rule. So if a classification as self-employed or agricultural income can be done, then you are out of that again. But whenever you are your own boss, the first step is you are then somebody with income from business if you can't step out into the more special fields. So when you are independent, then you check 15.2, then you end up, or then you are automatically in income from business category. And the next question is then, can I get out of it again into agriculture and forestry, into self-employment, or into mere administration of my own property? Otherwise, you stay in income from business. So strange things, strange examples might illustrate that. Imagine you are a professional killer. So you work alone, you are your own boss. But what are you? Which type of income? Naturally, business income. Because you are self-employed, you are your own boss, so business income, apart from a case where you could qualify as income from agriculture and forestry, well, killing people is not. And self-employed, is that a noble profession, professional killer? Is it similar to a recognized noble profession? Medical doctor, both kill people, but the medical doctor had to study that. Professional killer is usually a craftsman. So not comparable. Income from business would prevail. By the way, don't be surprised. You remember that there is a principle that who has illegal activities will never be preferred under the tax aspect over people who have legal activities. So indeed, if you were a professional killer and were caught by the police, the next thing you had to fill out is your tax declaration. Because indeed you had income from business and they would try to make you pay. Because illegal activities are also taxed under the normal rules. Who has an illegal job should not be preferred over holders of legal jobs. Good. On the other hand, you have a professor, not a professional killer, a professor living at Kleve, if living at Kleve is possible. It is. That professor teaches students in Kleve. Now it gets boring. And now, even more foreseeable, professor gets paid regularly by the university where he is having a job. Naturally, normally teachers are a free profession, but only if they are self-employed. So if you work for the university and have a job there, that's income from employment. So that would be type of income number 4. Now, the same professor at Kleve University writes in his free time, at that time I still thought there would be free time, a journal article which he intends to publish. And the article is indeed accepted by a publishing house, and they pay €200 for it. First, big party. Then, second, surprise, which type of income can that be? Well, I wrote that article on my own. For that I had no boss. I could decide that on my own. I could sell it on my own, could keep the money. So if that succeeds, that is evidently one of the income types number 1, 2, 3. I was my own boss. Now, agriculture and forestry is evidently out. Business income is a basic rule, but I get out of it if that is a self-employment case. And indeed, writers and authors are free professions. Indeed, in the Middle Ages, somebody who could write a book, that was a very noble activity. There you had kings and queens and dukes and counts. The counts were the ones who knew about mathematics. They could count. And then you forget that. And then you had even writers, people who could write, and others could even read. Impossible, nearly not to imagine. So you would never have taxed these geniuses who were able to write. And if somebody even writes a book, that's a kind of a Leonardo da Vinci in a smaller version. You would never make somebody like that angry and drive it out of your own city by claiming a trade tax. So writers and authors are also recognized free professions. So that would be income from self-employment, type number 3. Now, as you see already from the examples before, it is possible that one person has income from several types of incomes, because you can have several activities. You can be employed, you can have an online shop on your own, where you are the boss in your leisure time. You can combine many activities, and each activity is qualified independently from the others. Here you have a simple case. 19-year-old student owns 10 houses, 5 in Germany and 5 in the Netherlands, lives in the Netherlands with his or her parents, but has a second home in Kleve. Sells used things at eBay, earns more than €12,000 a year there, and has begun already to buy some things with the intention to sell them on eBay without using them before. So, the first is personal tax liability. Well, student is a natural person, so Income Tax Act applies, and having one home in the inland, one residence in the inland, is sufficient to be qualified as unlimited tax liable. So our student will be taxed under the rules for unlimited tax liability. Now, selling things at eBay, that might be a business. You do it on your own. Let's test it. First, it's independent. Second, is it sustainable? That's a rather curious word. A sustainable activity is some which you at least intend to repeat. You want to do it for a longer period of time. At least that's the intention, and it's organized in a way that it could also be carried through for a long time. And now, is that just selling private property, or does it begin to resemble to a trader's activity? Sustainable is they're sometimes regarded as resembling to a trader's activity. And the answer is, well, you have already begun to buy things with the intention to resell them. That is not the typical behavior of a private person selling his or her private chattels, private objects of everyday life, but this is typical for a real trader. So this would be a clear case of business activity, so it's business income. Although it's only 12,000 euro, this would be business. Okay. Now, income from dependent services is defined as wages, salaries, and all other names which you can find for remunerations for present dependent services, or for dependent services which you rendered in the past and for which somebody gives you a remuneration later. For example, if you have worked for 30 years for a firm and then you retire and that firm goes on to pay you a pension, let's say 300 euros in addition to your state pension, will be paid by your former employer. Then you get 300 euro, and that is a remuneration for your work which you did during the 30 years which have passed, which you did for your employer, because your employer naturally doesn't give you these 300 euro every month without any motive. It's a kind of an additional payment, voluntary or not, for the good services which you rendered to him in the past. So that is why present and former dependent services are covered. It can even be that you can even get income from dependent services without ever having worked, because sometimes an employer even pays a pension to a child when you die, some financial support. It's a kind of additional social security payment voluntarily made by your employer. Imagine you die, okay, not a nice idea, but you leave behind 2 small children and your employer said, I would very much regret if the children of such a good employee are left behind in total poverty, so I support them with a monthly payment of, let's say, 400 euro. Good. Now this is a remuneration, a payment, which has been made or which is made because of your former dependent services. And now, surprise, the legal definition just only says the wage or remuneration must be paid because of dependent services rendered, but not that you have been the person who rendered these services. So your little small children, 1 and 2 years old, would then get income from dependent services. Would probably be a strange feeling for the widow filling out the income tax declaration for the children. My child has income from dependent services, although it's 2 years old. Can happen. Here it shows up again that it's highly important how the law is expressing itself. Without getting a hint, you would probably not notice that the legal definition does only speak of payments which were made because of dependent services, but you would probably not recognize that it plays no role who rendered these dependent services. Must not have been or need not have been the taxpayer. Can also have been parent or somebody else. And even more. It is not even said that the wages or the remunerations for your services must come from your employer. Even a tip given to a waiter in a restaurant. Well, analyze the situation. The waiter is an employee. The waiter renders services. And now somebody who is absolutely not related to the employer gives the waiter something for his or her good services. So, in theory, the tip for a waiter in a restaurant under German law is income from employment. And indeed, it is. There is, especially because it's difficult to measure the amount of tips a waiter gets, there has been made a tax exemption for the usual tips for waiters and comparable professions, because otherwise they would probably all have to go to prison because they don't declare their full income. But in principle, it's income from employment. Good. Sometimes it might be difficult to draw the line exactly between dependent and independent services. For example, when you are a guest actor in a theater, sometimes you are paid only for the days when you work there, and then there is a question, are you an employee for 3 days, or do you come as an independent contract partner? All such things are then defined in detail in regulations, which do not really interest us as beginners. Income from lease and rent is a nice category. Number 6. Number 5 we leave out at the moment, comes later. Paragraph 21, number 1, if you let immovable property for rent. Second alternative, if you let for rent a multitude of things which form a new complex economic entity, the so-called Sachinbegriff. That is not if you let a single object like a car, movable property, but if you, for example, let for rent a firm. It's a multitude of things, and economically that forms a new complex thing, a firm. Legally, it is some desks, some computers, a building, and so such a complex thing will not be ignored by the law, because with that you can generate an income which really counts, and that is therefore number 2. And number 3 is income from lease and rent of rights. I mentioned already, if, for example, you allow somebody to use your patent rights in return for a license fee, then that license fee is also income from lease and rent. What is not covered under that headline, surprisingly, is if you let single items of movable property in return for a rent. That would not be covered here, but it might be other income. When it comes to number 7, other income, then you must know that only those items which are listed in a special list explaining what other item is, that only those items qualify as other income. That is a list of, let's say, 10 entries. It varies a bit from time to time. So one could say there are not 7 types of income, but 16 or 17, but I don't know why. It is just the case that other income is one type of income, the last one, and then covers an additional list of exactly defined entries. Examples for other income entries in the list is regular payments which you get from other persons, and there are cases where they don't qualify as income, for example, when the person already has paid income tax on that, but regular payments might qualify as regular income under other income, paragraph 22. Payments for or financial support to finance the living of a divorced partner can be taxable in the hands of that divorced partner. Rather important is other income is also the gain from the selling of private property. Now that should confuse you. We said basic rule is selling private property is tax-free. And now somebody came to the idea and said, okay, what certain gains from selling private property we will put on the list of other income, and that is in case where we want to tax it. The gains from selling private property are taxable in Germany if you sell within a short period after acquisition. That is, if it is immovable property, if you sell within 10 years after acquisition, or if you sell within 1 year in most other cases, movable property. There are again some exceptions. For example, if you sell immovable property and you lived in that all, you used it for your own living purposes in the year when you sold it and in the 2 years before, or ever since the acquisition, then it's tax-free. And selling movable objects is usually not tax relevant if it's objects of your own everyday life. Yeah. Also, a taxable affair is income from occasional services. So if you do something for somebody else and do it only once, you use a good opportunity, then this is not a business, not even a kind of leisure time business, because you don't intend to repeat it. But on the other hand, then it can be qualified as occasional service, and so it would be taxable too. Just for reasons of convenience, it is declared as tax-free if the annual surplus of income, revenue over expense, does not exceed 256 euro. I cannot guarantee if that is the current amount, can have been updated. 256 euro sounds strange. It was a long time the amount, because that was exactly 500 Deutsche Marks. And when the change of currency came in the year 2002 from Deutsche Mark to Euro, then the Germans were all absolutely keen on we are not going to get tricked by the fiscal authorities or by others. They probably want to use that as an opportunity to betray us, to take away some of our financial advantages. And so the fiscal ministry took great care to transform all the thresholds and tax-free amounts exactly to the euro, and never rounding down. That is why such strange figures came into being. Yeah. And when it comes to income from capital, we left that out just a minute ago in type of income number 5. There special rules apply. Since the year 2009, there has been established a separate taxation of income from capital, so separated from the rest, and that is a good reason to talk about that after a kind of a break. So, okay, now let's talk about income from capital. That is a special tax regime in Germany since 2009. And, sorry, that was the wrong direction. There has been established a different taxation from the rest of the income. Usually you have 7 types of income, and what you earned in all these categories is all summed up, and the total is then your tax base, and that is relevant for determining your tax rate and your taxes and so on. And in 2009, income from capital was withdrawn from the other 7 types of income, and it's now taxed separately, at least in the regular circumstances. The regular taxation of income from capital is now that on this income there is no longer a progressive rate, but a flat rate, a constant rate of 25%. This rate is levied on the revenue, so not on the surplus. Or the surplus is defined as the revenue minus no expenses. So it's a very much simplified taxation. The expenses are nearly not deducted at all, or in theory not deducted at all. The only way how expenses are in theory taken into account is that in Germany, if you live here, you can obtain once in a year an amount of 801 euro for free, and all the rest surpassing that 801 euro is taxed with the flat rate of 25%. The income from capital is officially still one of the 7 types of income, but as you know now, it is separated from the rest when it comes to adding everything up. So you add up only the other 6 types of income, and this capital income is then separated and taxed with 25% flat rate. If you want to identify what is income from capital, then paragraph 20, section 1, ESTG gives you the current income from capital. And since 2009, that's something new. When that change to that new regime was made, then also selling the source, selling a capital investment, that also is taxable now with the gain made from the sale. That is section 20, paragraph 20, section 2 ESTG. So this is now a kind of a breach of the basic rule for private property. Officially, that is still a surplus income. Officially, that is still private property if you own a capital investment, but the difference to the treatment of the increase of property types of income has been nearly completely removed. So here now both is taxable, the current interest or current dividends and the gain from the sale. These 25% tax have been standardized in 2009, and the whole levying of the tax has also been brutally simplified, because now people who pay out interest or dividends are forced to withhold 25% and transfer them directly to the fiscal office. So if, let's say, a GmbH owes you a dividend of 1,000 euro, which they have to pay over to you, they have to split up the payment into 750, which you get, and 250, which they pay on your account with the fiscal authorities. So they pay that as your tax prepayment on your tax account. This withholding tax is then labeled capital income tax. It's a prepayment on your annual income tax. So the person who pays the interest or dividend makes that prepayment in your name. And now you can see the prepayment is 25%. The definitive tax rate is 25% for income from capital. So in most cases, the prepayment is absolutely equivalent to the final payment. So very often you just can tick a box and say, all my capital income has been sufficiently prepaid already. Then you need not even declare it in the tax declaration at the end of the year, because the prepayment covers everything. So even legally, it is allowed that you renounce on declaring that money in your tax return. That's paragraph 43, section 5 ESTG. In principle, paragraph 43 regulates that capital income tax as a prepayment for the income tax of somebody. Well, only if somebody gets capital income which has not been subjected to that withholding tax in Germany, then you are obliged to declare that capital income and get taxed with 25%. That is, for example, if you get a dividend from abroad, or if a payment interest is paid to a bank account of you abroad, because a bank outside Germany will not levy German capital income tax as a German tax prepayment, then you will have to take care of that yourself. In all other cases, when capital income payments are made to a German bank account, for example, the bank will already be obliged to split the payment and make the prepayment in your name. In case that you need to find a reason in the law that capital income is taxed with that lower standard tax rate of 25% flat, you find that in paragraph 32D ESTG. Yeah. There are special cases now. For example, imagine you are the owner of a business and you earn some 500,000 or $1 million income from business. Now that is 45% in the top rate. Now, naturally, you begin to think, if I invested my capital in a bank, I would only have to pay 25%. And then I could borrow money from the bank and I pay interest to the bank, and that interest would be a business expense because it's caused by business. So I would lower, by taking a credit from a bank to finance my business, I would lower my business income considerably and my tax on it, and I would get a considerable and comparable amount as interest from the bank for my capital deposits, and that would be taxed with 25%. Or I don't invest my own capital in my firm. I just ask, let's say, my wife, my children, a subsidiary of mine, or somebody else to give a credit to me, to my firm, and so my firm has nearly no income because of huge interest payments, and that interest ends up in the hands, let's say, of a closely related person of mine, and there it will be taxed as income from capital with only 25%. Naturally, that could be highly attractive, and naturally there are some anti-abuse rules concerning that models. They are in 32D section 2. Furthermore, in that case, by the way, when it's regarded as an abusive interest financing of a business, then the interest income is in the hands of the recipient charged with the regular income tax rate. So then it will be regarded as a part of that person's regular income and added up with all the rest of that person's income taxed at the regular rate. Some other exceptions are that usually, as you have heard, income from capital does not allow you to deduct expenses. So there might be some entrepreneurial business motives to invest into, let's say, a GmbH with a major participation, and because that's your business. Let's say you take 100,000 and establish a GmbH which is owned 100% by you, then the dividends will be income from capital, 25%, but costs are not deductible. Now, in such a situation, it might be necessary or not unusual that the owner has financed a bit of the 100,000 by a bank credit, so that the owner has costs. And in such a case where somebody has a major financial interest in a company, that person is allowed to opt out of the capital income taxation towards regular taxation of the dividend income. That is, that the revenue from the dividend will be regarded as taxable revenue, and you can offset the corresponding expenses which you had. And in the end, there is even something to take into account, that there might be some people where the simplification of the rate, setting it always at 25%, is regarded by them as too burdensome. Imagine somebody who is relatively poor and only pays 50% income tax regularly. That person might have an interest to opt for sorry that person might have an interest to opt for the regular tax rate, and in that case you can renounce on the capital income taxation scheme, and your income from capital would be just added up completely with all the other income from the other 7 types of income, from the other 6 types of income. Yeah. So there are certain exceptions, but in principle, and the principle is relevant for us as beginners first, in principle, that means income from capital is taxed with 25%. Good. Yeah. Now, naturally, ladies and gentlemen, there is one question remaining, and that question is naturally, why is that done with that special rate for income from capital? And the answer is, well, income from capital is very mobile. Usually it is taxed, the interest and dividends of a person are taxed in the country where that person lives. And now rich people can easily move to another state. And so it became more and more frequent that people with huge amounts of capital income moved to another state where the tax rates were lower. And so much tax revenue was lost. And now the legislator just had the idea in mind, okay, let's think about a compromise. We give to these capital income people a lower tax rate, and in return we probably can keep them within our country. So it's better to get 25% of, let's say, 1 million than not to get 45% of 1 million, which is no longer available. That was one motive. And the second motive was in 2009 or until 2009 or so, it was a huge hobby of the German population to hide interest income from the fiscal authorities. Nearly everybody in Germany is suspected of not declaring their full interest income. And now that withholding tax was a shock for everybody, because this way it was now secured that all interest income was really effectively taxed. And just as a kind of small bonbon to make that a bit sweeter for the people involved, they could at least now profit from a lower rate. Here again, the logic was, we rather prefer getting 25% of the income, which we really get, than claiming 45% of an income which will never be declared according to tax law. That is overall the explanation for that lower tax rate, and that is a phenomenon which can be observed in several states. Good. Okay, now there you have 7 types of income, ladies and gentlemen, again. So you always classify everything which happens according to that list. And one thing which you have to do when you have a case to examine, you read, where does that person live? Is it limited or unlimited tax liability? And next thing is, now there are 23 events mentioned, and then you know what you have to do. All the 23 events will be checked one after another to which type of income they belong. So you can already, with some basic knowledge, write 23 lines which are absolutely okay. Now, nevertheless, for certain purposes, the legislator regarded that as a bit too complicated. And so, in the course of time, some simplification rules came into being, which can be applied, but only under the circumstances where they are written for. For example, one of the oldest simplification rules for types of income was the rule for, in the German Corporation Tax Act, the Körperschaftssteuergesetz, KSTG, that certain types of juridical persons can, by definition, only have income from business. That is, for example, the case for a GmbH, an AG, an SE, all those capital companies or all those juridical persons, legal forms which are mainly meant to work in the economy. So every income which a GmbH or AG has is automatically classified into income from business. A GmbH cannot have income from agriculture. Is ruled out by Section 8.2 KSDG. Absolutely impossible, because every income of a GmbH is automatically income from business. A GmbH cannot have interest income, not income from capital. So a GmbH also never can profit from that separate capital income taxation. Absolutely impossible, because everything what a GmbH has is automatically reclassified into income from business. That also means if a GmbH owns 10 houses and gives them to tenants, it's not lease and rent, it is income from business. And drastic consequence, if it is income from business, then the houses are automatically business property, because business property is the property which serves to produce business income. So that's 8.2. And the legal forms in question for which that simplification rule applies are listed in the KSDG in paragraph 1, section 1, numbers 1 to 3. Mainly GmbH, AG, SE, and all other capital companies which can pay dividends. When it comes to partnerships, in the course of time, the legislator designed some other simplification rules for the determination of income. One is that if a partnership was generating at least by one activity income from business, then it was assumed automatically that all income of that partnership, irrespective from which source it ever came, was automatically classified as income from business. What does that mean? If, let's say, 3 partners together form a partnership, let's call it an OHG, often a Handelsgesellschaft, so general partnership, and that partnership now acquires one food shop, grocery, and let's say 100 houses, which they let to tenants. Then this partnership has in principle 2 activities: the grocery shop and the houses. Grocery shop is a business activity, definitively. And now the simplification rule comes into play and says, now we have a partnership, and for a partnership, the rule is if the partnership has at least one genuine business activity, then all activities of the partnerships are automatically deemed to be business income. So the income from the houses is automatically reclassified into income from business, and the houses turn automatically into business property. Yeah. Only cases where the business activity is absolutely unimportant, miscellaneous, then the courts have ruled that that does not come into play. But whenever you have a kind of substantial business activity, this rule makes your life relatively simple. Imagine I design an exam case for you. 3 people form a partnership, then they do 23 different things, so you think you have to check 23 different activities. But activity number 2 is they run a bookshop, selling books. Not writing them, but selling them. That's a business activity. So the partners run a business together. Automatically, everything that partnership does is income from business. All the property they own is automatically classified as business property. Selling this property is so therefore always taxable, because business is always taxable. Plain and simple, may help. But what you must know is, for a single person, that rule does not count. An individual person like me or you can have 7 different types of income for every different activity one. You probably know that book title, No Man is an Island, entire in itself. You can also say no man is a partnership, entirely alone. You need for a partnership 2 people together or more. And so for a single person, this partnership income determination simplification rule can never be applied. If you try to apply it, I probably remove you from my last will and testament, and then I say I never knew you. You can find this simplification rule in paragraph 15, section 3, number 1, ESTG. Just for historical reasons, there was also another simplification rule made up, specially designed for partnerships, KG, a limited partnership, or any partnership of a similar structure, which is characterized by the fact that no natural person is a full partner. You know, perhaps in Germany there is the nice idea, historically developed, that there is a type of a GmbH and co-KG. That's a KG, a limited partnership, where certain people have just to contribute money and get a share in the profit. These are the limited partners. And where there is at least one full partner who is responsible for all the debts to the outside world. Naturally, nobody ever wanted to play that full partner. So 100 or 150 years ago, a clever person came to the idea the full partner is going to be a juridical person. I found a GmbH, and that GmbH forms a partnership with me as natural person. GmbH makes a full partner, and I am going to do the limited partner. That's a GmbH and co-KG. Naturally, that was a clever combination of 2 types, because now you were a limited partner, so you were not responsible for the debts of the partnership. All liability was kept up by or held back by the GmbH. And so in principle, that was the same economic effect as if you founded a GmbH, but it only brought along a different tax treatment. And so the courts after a time said GmbH is always business income and always liable to trade tax. GmbH and co-KG is sometimes not. We don't see a good reason for that. And so the courts very often ruled that a GmbH and co-KG, where the KG partners, the limited partners, have no other rights, where they only contributed capital, that in such cases that is nothing else than a kind of circumvention of founding of a simple GmbH. And so they said also such combination should be treated as having only business income. Later, when that came under attack and became disputed, one wanted to clarify the situation, and then the legal rules were made in set down in paragraph 15.3 number 2 ESTG, that if a KG has only a GmbH or an AG or another juridical person as only full partner, and the limited partners had nothing to do, no right to make management decisions, so that they only were capital investors, so that they only also could have just become another shareholder of the GmbH. So that in these circumstances, also then when the KG had no business activity at all, everything they did was classified as business income, and all they had as business property. So just to sum that up again, 15.3 number 2 means, or is for cases where you have a limited partnership, KG, with only a GmbH or a comparable form as full partner, and the limited partners having no right to take management decisions under the partnership contract. In that case, business income is the natural consequence. So when it comes to determining the types of income, you must know that depending on who you are, there are different possibilities which kinds of income you can have. Natural person like me alone can have all the 7 types of income. I can be a farmer, own a bookshop, write books, have an employed job at McDonald's or Burger King, own some houses which I rent to others, invest some capital in the bank, and can become a member of parliament, and that would be other income. So 7 types of income possible. If we have to do with a partnership, then in general, any partnership, so when several people do something together, if there's one business activity, everything is infected with the business income label. So all they do is automatically business income. Or if you have a GmbH and co-KG or a comparable structure and the limited partners have no management rights, then it's automatically business income even if they don't know business at all. When you have other partnerships, that's important, and that is often overlooked. So when you have a partnership which has no business activity, then all other types of income are possible. Here is a logical mistake on my slide. I wrote here down all 7 types of income are possible. That's naturally not possible, because if you have all the 7 types of income, you would also have one business activity, and that would turn everything into business under the first simplification rule. So all the other 6 types of income are possible. So if a partnership has a farm, also if they are busy then with some free profession and let some houses also, then 3 different kinds of types of income are possible. Next alternative, if you have certain legal forms like GmbH, AG, SE, cooperative or so, then everything is automatically business income. With other juridical persons, again, where that simplification rule does not apply, all types of income are in principle possible in case that their conditions can be fulfilled. Yeah, that's again a good reason for it. Okay, that's now the end of this chapter. I hope to see you soon again when chapter 4 or another chapter is able to arrive on video. And naturally, my last request is again, do not forget to recommend this channel to people whom you like or don't like. And if you are a student of mine, don't forget to learn all chapters of General Introduction to Tax Law for your exams, including those which are not yet on video. So, yeah, have nice days till we see each other again. It was a pleasure to talk to you. Probably it was not a pleasure for you to listen, but at least I enjoyed it. Have a good day, and don't stay too long away. Thanks very much.